Hey, how you doing? Welcome to the Closing Beat, everybody. How you doing today? Hope your May is going off okay. You jazzy jazzertons out there, huh? Is that something? We can do that. Jazzy jazzertons, man. We are Jazz Wealth Financial Advisors here. And fun fact, we call it Jazz Wealth because a jazz musician is known or presumed to be a master of their instrument. And so one who is a master of their craft has no fear. They're not worried about playing the wrong notes. They're not worried about maybe playing out of time. And so therefore, they can be themselves. They can be genuinely themselves without fear of ridicule or anything because they know they're doing the right thing. They know they're the master of their craft. And so that's why we call it Jazz Wealth. I also happen to like jazz music myself, but now you got a little bit of inside knowledge there. I hope you check us out at jazzwealth.com. It is officially May. Do we sell in May and go away till Labor Day? That is the full saying, although most people don't know the full saying. I am a complete market nerd, so I happen to know the full saying there. We're going to go over the data here today with you to show you the difference there. Don't worry, you're in the presence of USA Today's one of our top financial advisors for 2023. Don't know. I see that other advisors may be paid for something like that. We did not. I don't know. They just called us up and said that's what it is. Maybe it's because we do wine and wealth classes every week for clients. Actually, this week coming up will be for our new clients. So if you're just joining us here, you want to know how everything works, where you should be looking, what you should be doing, Eric will be conquering that one there. And I have a video to post as well, but that one will be live 8 o'clock this week. Before we get started, do we have a Guess the Dow winner? We have a Guess the Dow winner. Okay, let's take a look and see who we got here. Ta-da! Vanessa T. wins Guess the Dow. Okay.
It's our first non-client that has won, our first person that's not a client that has won. So our theory of maybe we were given the goods to clients only kind of debunked there, but yeah, good for her.
That's right. So no matter how much we tried to help clients win there, Vanessa snuck in there and won 3409-201, closest without going over. And did Vanessa's got a gift card going out to her?
She's going to have a gift card going out to her.
She already responded?
She has not yet.
Oh, okay. Well, we need their address, right?
Yes.
So Vanessa, where you at? You won. Come get your gift card. Well, we'll mail it to you. But congratulations to Vanessa T out there. If you want to play, go to jazzwealth.com/guess the Dow, and you're more than welcome to play the game, whether you're a client or not. Doesn't matter. Just a little fun game we're playing. All right. Let's talk about this. The markets. Not much to go on here today, right? So if you look at the S&P here today, first of all, in Europe, it's something called May Day, so the markets are closed. A lot of econ data that we would have gotten overnight, we didn't get. So the market didn't really have anywhere to start today. It was pretty much flat. It attempted to move higher, but realized there's not really a whole lot to go on there. And so it was kind of a choppy sideways day because we didn't have world markets open as a whole. And that's fine. So despite the FRC chaos that's going on out there, the market still managed to finish last week mostly higher. It closed out the week higher there, and year to date it's up over 8% there. So, can't scare the markets anymore. That's interesting, right? So, where we want to go with this, you can see the charts. For the Russell 2000, that's the only weak spot for now. Right, small cap stocks in particular, small cap industrials and materials and financials, a little bit of weakness there. It's hovering around flat year to date. In other words, if you were to just go like this all the way to the beginning of the year, see there's the opening day of the year. This is the official open. It's basically right there. So that would be the only weak spot there. However, we got a very, very busy week coming up here for the stock market. We've got manufacturing data, we've got employment numbers, services numbers, that's always a good one there. We have the Fed announcement coming out on Wednesday, jobless claims on Thursday, and then the official the employment report on Friday. And then there's, of course, earnings every day along the way. Busiest week of earnings in here, so be a lot of attention paid to the markets for, as far as that goes. But Wednesday is most likely just going to be dominated by the Fed. I have a funny story to share with you here in just a second. If we look at the Dow, it's the same thing. A little ho-hum kind of a day, not sure what to do. If you look at the NASDAQ, just a touch weaker, but still with the range that we've been seeing lately, not really a wide range day. Just a little quiet day moving around there. We know the S&P is in the same position. However, it is right against that line. No one wants to be the first to pay the top price, but somebody's going to have to do it. Otherwise, the market's not going to be moving higher. If you look at the price of oil, a little pullback inside of a strong rally to try to break the downtrend there. I say I'd need more information there. I'm not convinced on that one way or the other. You just have as equal number of selling pressure as you do buying pressure. And I worry, if you can see it, yeah, you can see it. I worry that it goes back into this kind of mess here. Overall, optimistically bullish on this. I think oil will be over $90 a barrel soon. However, in the meantime, that short term, I just kind of worry about it dying out there, and I'd be in no hurry to mess around there. If we look at interest rates here, sharp move higher in interest rates. That's because, well, Wednesday, the Fed is going to announce a quarter-point rate hike. It's not a matter of if they're going to do it, they are just going to do it. And tonight on Jazz After Dark, I'm going to take a stab at the exact wording in their statements because I believe I know exactly what they're going to say, which is a pre-made statement. So Jerome Powell will come out and he will read like 3 or 4 sentences, and he always reads the same sentences, and they take words out and they put different words in. I believe I know exactly what they're going to say in the Fed meeting. So tonight I'll go over it with you. Let's see how close I can get. And also I want to share some data with you because this is likely the end. This is the end of the rate hike cycle, at least for the moment. And so that's important for stocks. It's important for the stock market in general. So we want to talk about that. Before we get to sell in May and go away, Cody, did you hear that the Fed president in January was pranked? Mr. Jerome Powell himself.
You got a prank call, right?
He got a prank call.
I did.
Yeah.
I saw something about it on Twitter, but I just...
That's official. That happened. So these 2 guys out of Russia, think of them as like morning show hosts here in the States, but they're comedians. They managed to get Mr. Powell to believe that he was talking to the president of Ukraine, Vladimir Zelensky, and they managed to get out of him what he's going to do with interest rates and how he's going to handle all of this. He literally said that either we're going into a recession or growth will stop in the economy. And he also said that he's going to keep rates higher for longer than anyone expected to try to squash inflation. So it's not necessarily different than what he's been saying to everybody publicly, but this happened in January. And in January, if you remember the Fed speak, they were saying, I don't know, let's just see, we want to keep inflation under wraps. He had already said, we're going to raise rates further and we're going to leave them there until we get this under wraps. So what happens there when this news comes out? Any prediction of rate cuts for this year, out the window, man. Out the window. Now, if you go look this up online, this is where you got to be careful now, because originally they didn't release the video interaction of this. Now there are people that are editing the video. So if you look it up, don't look at the edited ones, because now the powers that be have took over and tried to make it look like it's not a big deal. But if you get to see about a 2-minute clip that's straightforward and not edited, it's severely embarrassing. And not only that, security-wise, you kind of think like that's kind of an interest, there. But there are people now that are taking that video and just putting funny words into his mouth and stuff. So there will likely be many edits of that. And I think they hope that that happens, right? So it just gets washed away and people think that wasn't real. That, oh, look at Jerome Powell telling a dirty joke. No, let's see how that goes. Very interesting there. I thought that was quite funny there. This has happened to other people, by the way. It's not just his issue. All right, let's cover this. Sell in May and go away. Is it true? Should you do it? The answer is it's not as easy as it sounds. So when we sell in May and go away, it's not that there's negative returns, it's that the returns are just not as good as the other time period in the market there. So what we're talking about is if you look at the market from May until October, there's a wild difference in its behavior than from November to April, right? So everybody always compares those two things. Since 1950, I'll just share this here with you. Since 1950, the S&P has had a 62% positivity rate in the May month, right? So I'm trying to say like May, it's not like going to be a negative month, and there's no real stat that shows that it's more negative or averages a loss throughout that month. 62% of the time it's positive there. By the way, since 1950, if you were to randomly pick a month and say, what's the probability that it would be positive, you'd have a 61% chance of it being positive. And that's just simply going back and looking at all the months and then figuring out what the whether it was positive or negative. The trouble is this starts to work out kind of a weak time period for the market. So let's take a look at this here. Nope, we want to look over here. All right. So what we did is we took the average rolling performance of the entire stock market from 1950 to 2022 and just modeled it, right? What was the performance? You've seen I've done this before for you guys numerous times. Where we're at here is now May 1st, okay? So we try to draw a line and go from May, here's hopefully you can see that. From May to October, the median returns are 5%. Okay. However, if you look from November to the end of the year, of course, we know, seasonal type, Santa Claus rally, all that stuff, 17%. If you look from the beginning of the year to April, 13%. So it's not that that the markets just fall apart and there's losses. It's that the returns over a whole long time period, just after World War II, are just less, right? So if you were to look at the heartbeat of the market throughout the year, we start the year off, first 2 days of the year are always the most volatile. There's no way around that. That has never changed. We got volatility here. You have your February sell-off, a little bit of a pullback and a massive rally. We know now April is one of the strongest months of the year, and that was definitely the case this year. And when you get into May, yes, you do have a historical pullback there, but the returns around 5%. So in other words, sell in May and go away. If you could only participate in one time period in the market, you'd want to participate from November to April, right? But it doesn't mean you want to skip May through October. It just means it's going to get kind of quiet and kind of choppy in there. Now, where can you look? It wouldn't be right of me to just give you some basic data there, so let's go a little further. If you look through the sectors there, the tech sector is the only sector with a median gain of over 2%, 2.4%. And by the way, it's been positive half of all Mays. Right, so this is just for May. 2.4% tech sector does it. You got a 57% chance that it's going to be positive. It's also the most volatile sector in May. Just a side note, not on my notes here. The tech sector in May, if you were to not only look at the performance, but look at the range that it had, plus or minus 5%. So May can be extremely volatile with a median return of 2.4. However, you were down 5 at one point, you were up 5. You get what I'm saying? So a big range there. And that happens more than 50% of the time if you look back. It's just a side topic there. All right, looking through the list here, healthcare and real estate, 1.09% there for real estate. These two have the highest odds of being positive. 74% of the time, if you look back to World War II, these two sectors are positive 74% of the time. There's not really any other way to say that. The S&P's May performance, 1.07%, median performance, sorry, just for the month of May. So in other words, is it a reason to run away? You don't have a high odds chance of any of these sectors being positive other than real estate and healthcare, but your returns are likely just going to be a little bit more choppy and a little bit more quiet. So hopefully that helps you guys. All right, let's talk about it. FRC. So FRC in the news, of course, JP Morgan taken over, and I don't know, what do you think? Do you care? It's over, right? The media chose to focus on the headline where Jamie Dimon said, this crisis is over. But they're going to take over $173 billion worth of loans, $176 billion of deposits, which were there. They're not there, and now they're presumably coming back there. This is gonna, there's a whole bunch of stuff here. It's gonna trigger a after-tax gain of $2.6 billion. But JP Morgan says it's gonna cost us about $2 billion after tax for the next 18 months to get this going on here. They think that this new addition here is gonna generate over $500 million of net income per year, which is not a whole lot for them, but certainly nothing to sneeze at. One of the interesting things, they also have a loss share agreement covering acquired single-family residential mortgages and commercial loans. The FDIC, which supposedly didn't have any money, is going to provide $50 billion of 5-year fixed-rate financing to help offset losses that JP Morgan may take in the single-family residential homes and commercial loans. So it's going to cost the FDIC insurance fund $13 billion. How do you think they're going to get that back? They're going to get it back from FDIC assessments on the big banks. So JP Morgan's getting this money, then they're just going to come back and go, you need to pay us more. It's kind of the short way to think about it there. Very interesting, this transaction, if you look into how they're going about it there. But that is what's going on with FRC, and unfortunately, if you have the stock or anything, that's the end of it. Lockheed Martin, a little less interesting headline there. Lockheed Martin gets a almost $8 billion adjustment to one of their existing Navy contracts that they have. That's a heck of an adjustment, don't you think? By the way, every stock that reported today beat on earnings. AMG, Checkpoint. We've got Global Payments. We've got, where's the other ones there? Norwegian Cruise Lines. On semiconductors, SoFi. That brings me to SoFi, actually. Let's talk about that. So SoFi, they beat. Now, they still lost money, but they beat, right? That's always a little confusing. So they were expected to lose X. They only lost X plus 1, right? So that's as simple as that can be there, which I think is interesting because this stock has been dead for a whole long time here because they are rapidly investing in themselves. They're playing the Amazon game there. We want their share of a little piece of your wallet. If you're over here at another bank doing something for high interest credit cards or whatever you have, we want it. If you're doing auto loans, we want it. And so they're investing really heavily there and now starting to lose a little bit less. Just throwing that out there. TJ Maxx, this one was in Barron's over the weekend. They said, who's going to benefit the most from Bed Bath & Beyond going bankrupt? TJ Maxx. That is their assumption, not mine. And, it's a pretty good guess, I think. You look at the stuff that they have in the back of those stores, kind of what Bed Bath & Beyond has. Still no beds, but same thing. And then lastly, NIO. I know some of you follow this, so I'm bringing it up here. April deliveries for cars, 6,658. The headlines all report a 31.2% year-over-year increase in their April deliveries. It's still 6,600 cars. That's not they can't make a profit at that pace there. So, you know what I mean? That's what it is. Otherwise, we've got earnings. Dow DuPont coming up tomorrow. Marriott, Marathon Petroleum, Pfizer, Uber, AMD, Clorox, Ford, Starbucks, and Yummy China. We'll report. I'll try to take your questions if I can find them here. And then remember, Jazz After Dark tonight, we're going to talk about exactly what the end of a Fed rate hike means, rate hike cycle means for the stock market, interest rates, and everything. And then we're going to lay out my best guess for what they're going to say in their transcript. Yeah. SoFi getting your money recently out of the shares because you're down on your shares, or is it, cash back, 3% cash on their cards. Yeah, they're being aggressive. They're very, I should say competitive. They're being very competitive out there. Yeah, no problems there. Okay, got you guys fired up with some of the politics there. Brent saying the fact that he even shared those policy decisions with who he thought, and rightfully so, thought was the president of another country. Blows his mind. Yeah, there you go. Looking deeper into it. It's one thing to go, oh, you got pranked, it sucks. Why were you even talking about that? Why are we talking about that in the first place? Should we not be talking about that stuff? Should we maybe just kind of keep that tight-lipped? I'm with you. Yeah, Disney moving a little bit higher just day by day here. Friday, of course, getting over the 200-day. A little disappointed you didn't see more out of it here today, but given that the markets didn't do much, you give it a little bit of a break. You kind of have that sign of all clear here, right? So maybe back to 110, if that's, because remember, that's where it struggled before. Looking forward, Jazz After Dark tonight. I won't disappoint. How do your shares of FRC go from here to get to FRQ or something? I'm sorry you have those, first of all. This is different than SIVB. This is not a bankruptcy. This is from receivership to another owner. If there is any value left in that stock at all, I didn't see any. I don't see how that's even going to happen as of the deal from JP Morgan. But if for some reason there's a penny per share left over, you'll be paid out that penny per share and it's over. Remember, common stockholders are at the bottom of the liquidation ladder. Yeah. I know. You ever... Yeah, I know. What was the thing me and Eric were just talking about? The hard landing, soft landing. I was trying to think of something else. I am still in the soft landing camp. So far, I am right. But I don't know. That's, I wouldn't say Eric is lost on this one, but we're definitely sitting in the position of a soft landing. We have an economy and a stock market that agree with that for the moment. I know I've been saying that for a while, but that's what's happening there. We have seasonal tailwinds, as TV would say. We have third year of a presidential cycle, which is also bullish. We have the fact that we haven't hit new lows in over 6 months. That's historically bullish. Of course, we have the end of a rate hike cycle, which is also bullish. And now I'm not saying, by the way, I'll talk about this tonight. There is no way that the Fed is going to, on Wednesday, give the green light to the stock market to go higher. That would hurt their cause. So that's why I have some pretty particular opinions and accurate guesses, I believe, as to what they're going to say specifically. And I'm going to actually go back and show how I came to that decision as well. So we'll have some fun with that one. What will be the indicator to allow the market to break through previous resistance since rate hike cycle is coming to a close this year? I would think earnings. Just in the ultra short term, I would think just earnings, because we're still in the thick of it. You have the econ data that we talked about earlier today, so maybe the jobs report on Friday or the employment numbers on Friday, but it hasn't been much of a market mover lately, so I would think if I had to pick one thing, I would go with earnings for this week and next week. Yeah. Well, there's a lot of people that didn't do too well with that First Republic MD. So, yeah. That is an issue. I got a lot of emails about all of you secretly buying that, not telling me about it, huh? Oh, boy. Hope you didn't buy a lot, though, You can always survive little mistakes. Those big ones, that's the trouble right there. All right, I'm going to wrap it up there. Got a handful of comments today. I appreciate that. And I'm going to get back to work and do my thing. I wish you a good rest of your day. We have a busy, busy week ahead of us. I will be here. I will be ready. And just can't find the right button to press to get out of here. All right, see ya. Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.